Hi, Gene. How are you?
I'm wonderful. How are you doing?
I'm great. Good to see you.
You too.
I'm excited to have Gene on today. He is a good friend of ours. One of my very best friends, Adrienne. She's worked at bex+Co, I believe, for 8 or 9 years now.
Long
With
time, yeah.
yeah, a long time. But we also started working together at a commission salon. And, after I opened bex+Co, she went booth rent, and Gene is her husband. So he kinda knows the ins and outs of the business. He knows what it looks like to be a stylist and to be self-employed. And technically, would you consider you're self-employed? Would you consider yourself
Yeah,
self-employed?
I'm self-employed, yes.
So, Gene, on that note, tell us a little bit about yourself and what you do.
Well, first of all, thanks for having me. It's amazing. As Rebecca had mentioned, I'm married to a hairstylist. And not only did she go through her career with Rebecca, but Rebecca's been a fantastic mentor for her as she's grown her business to a very successful business. So I think it's just incredible that you're doing this. Because it's a great audience that we can really make an impact on and help some of these folks out there. So, my name is Gene Griffin. I'm the director and senior mortgage advisor of Summit Mortgage Solutions. We're powered by Barrett Financial Group LLC, and basically we specialize in everything mortgage related, from residential, investment, commercial real estate funding, and lending. We do everything from your traditional government backed loans to non traditional mortgages and solutions, which we'll talk about a bit more in this call.
Mhm. Awesome. And I do have to do one more Adrienne brag. She might get mad at me for this, but I actually think, of all the stylists, I don't know everybody's income, but of all the stylists that have ever worked with me at bex+Co, she's the only one who has actually made more than me majority of the years that we worked together,
I'll
which
tell
is
you,
just crazy.
what I had no idea. And so we started dating. I was like, you make how much more money than I do?
Mhm.
And I'll tell you what, as a couple, it's been amazing for me to build my business out knowing that my partner
Yeah,
can meet me halfway and support,
sure.
this endeavor. It means a lot, and it's just extremely powerful. I wouldn't be able to be sitting here today still doing this amidst a tough market without that kind of support and partner backing me. So it's incredible.
I love that. That's what we kinda wanna teach is how to get there. Okay, so we'll jump right in. We're gonna be talking about mortgages, particularly, I think what we kind of wanna focus in on right now is, like, your first home or your second home or whatever it might be, but getting a mortgage as a employed person is definitely different than whenever you have a W-2 or you work for somebody. So can you kind of give us some key factors that lenders typically consider, when they're evaluating self-employed individuals' eligibility for
Sure.
mortgages?
Yeah. So let me give you a little bit of the landscape of what my world looks like. So you have retail mortgage banks, right? These are mortgage banks. All they do is mortgages, and you have loan officers there, which on paper, I'm a loan officer. I did the education, I took the test, I passed it, obviously. Um, so I'm a mortgage loan officer, just like anybody else that has a license. But in practice, I'm more elevated with my service. And I'll explain that a little bit. So you have retail mortgage banks, and really, that means if I work for a retail mortgage bank, usually I'm sitting in a call center and they're sending me leads, and I work for that bank and my allegiance is to that bank.
Right.
I've got whatever products they allow me to sell in one set of rates. So if the bank doesn't want to do the loan, sorry, I can't help you. And
Right.
they have to go down the street and find somebody else. So I used to work for retail banks. I'm now in the broker space, much different landscape there. So in the broker space, I don't work for a bank. In fact, I have about 150 wholesale mortgage banks that are competing for my business. So when a client comes to me and they have, something we're trying to solve or provide a solution for, if one bank doesn't want to do it, no problem. I've got 10 other great reputable companies lined up. So the way I kind of explain some of the key factors of what we're looking at, I do a lot of analogies and metaphors. So, right, a home has a roof, right? Think of a home having a roof. Now, something's got to hold that roof up. And I always say there's three pillars holding that roof up. One pillar being income, right? How much money are we making? And we'll talk about that a little more in depth. The second pillar is assets.
Okay.
Cash is still king. How much cash do I have in the bank?
Okay.
And then the third one is credit. No, I like to say that, hey, if we've got 1.5 strong pillars, we can make something happen.
Okay,
If we got 2 weak pillars, we have some work to do, which I do a lot of developmental work there.
sure. And that might be some of what we're talking about today is like,
Yeah,
hey, I'm 2 years out, but where the heck do I start? I don't have any cash. I have bad credit and
yeah,
I'm self-employed. What do I do?
exactly.
So that's a
And
good example.
and on that income pillar, it's not just what people think. It's not just tax returns and W-2 income. So there's other options there, which we'll dig into for sure.
Okay, cool. I love it. So if I were, I mean, let's say I'm like a year out from getting my mortgage,
Mhm.
uh, and I'm kind of wanting to start preparing. Are there like very specific financial records or documents or things I should be keeping now that I'm going to need when I apply for my mortgage? Or what am I going to need? Like, what do I need whenever I want to do this?
So I remember a time in my life that I thought, hey, I'm smart enough, intelligent enough to figure out all the things in my life I need to figure out.
Sure.
But there's really value in working with professionals that
Mhm.
specialize in certain areas. So the first thing I would suggest just before we dive in is working with a good CPA
Okay.
and truly running your business with the respect it deserves as a business that's scalable, right? So a CPA, if you hire the right CPA, your documents are going to be there. Make sure they understand your goals. Hey, I want to buy a house in a year, 6 months, 2 years. And make that be known because they can work with you and advise you in that area. Um, you definitely want to stay organized with your finances. Um,
Like
you know,
very clear bookkeeping and like
yeah,
have
keep your
a separate
bookkeeping
business
clear.
account from a personal account and just making sure you can say if somebody says, "How much do you earn?" You don't wanna be like, "Ooh, I don't really know." You wanna have
Exactly.
a very clear idea of how much you make per month, per year.
Exactly. And also, it allows you to be in control of your finances, right? Because if
Yeah.
you're not paying attention, your finances are controlling you and they're unorganized. But if you're paying attention, or at least the records are there, you can go back and you really can take control and empower yourself to run your ship, right?
Yeah,
So I think really just working with a good CPA is going to help you get in front
yeah,
of any documents that you might need, taxes, 1099s, profit and loss statements,
so
um, initially when you're starting your business, there are upfront costs for these types of things, but I promise you it's worth the value,
oh, sure.
right? You get the return on it. Um, Also, depending on which way you go with your business, have a dedicated business account specifically for your business, right? And keep those personal transactions and business transactions separate. It's just going to set you up for an easier transition or process down the line.
I love that you're reinforcing that because one of our modules in our course is about doing that, and then we had a CPA and a bookkeeper
I
that
love
we
it.
talked to, and they said that, and now you're saying it as our broker. So I think that that's one of the really important things, if nothing else comes from this course. Please
Totally.
keep your business purchases and expenses separate from your personal. Like, just keep it separate. If that's all you do is have your separate business account, it's huge.
I review a lot of taxes, and when I see opportunities missed on people's taxes, I usually ask them 2 questions. First question is, do you prepare your own taxes or do you pay somebody?
Sure.
Right? And if they prepare their own taxes, easy answer, stop doing that.
Yeah.
Pay somebody.
Oh, for sure, for
If they
sure.
pay somebody, the follow-up question is it a family member or a friend,
Yeah,
or is it somebody that you hired? And if it's a family member or friend, I'm like, okay, well, it's time to find somebody else,
I
right? And figure out how to handle that. Or if they are paying somebody else and I see areas of opportunity that are missed there, it's time to find somebody else. I know some great people I can refer you to.
great.
Um, I think it has to be said, I'm not a tax professional. I'm not a tax attorney. I'm not a financial advisor, but I deal with this stuff on a daily basis.
Fair. Yeah, absolutely. No, I love that. So, just to kind of recap the 3 things that we're really focusing on are our income, our assets, and our credit. So those are 3 separate things that we kinda need to work on, working on our credit score, having a little bit of cash in the bank, and getting our income up and showing on our taxes that we actually have a good
Yep.
income. Even though sometimes it's like, I wanna write everything off, we wanna make sure we're just really it comes down to just kinda being honest on your taxes, which
Yeah.
I advise anyway because you wanna definitely take all your write-offs. There's ways to work that in with a mortgage, but overall, like, don't write off your apartment if
Yeah.
like things that can get you into trouble are also going to keep you from buying a home. So,
Well, I'm actually gonna drop some solution bombs on this call that we may not even need tax income.
oh,
So we'll
okay.
we'll dive into that
I love
too.
that. Okay, well then let's move on.
Yeah.
Uh, what steps can self-employed individuals take in advance to in, improve their chances of getting approved for a mortgage?
Yeah, so we kinda touched on this a little bit, but taking control of your finances and your credit, right?
Okay.
Look, we've all been in our teens and 20s, we've made credit errors, mistakes, I guess you could say, and a lot of people continue to make those mistakes, but then
Sure.
they just ignore their credit because they think they're too far gone.
Right.
Anything can be fixed. I mean, I've seen people with a bankruptcy a year ago have 700 over 700 credit in less than a year
Okay.
because they knew what to do, right?
Sure.
So, generally, these people allow income or their finances and credit to control them. Um, but you do the work, you make the money, so you gotta take control of it. You
Right.
gotta look at your credit and your finances face on, working with professionals, if there's credit issues, there's a lot of things we can do on our own. But sometimes you hit a wall and you're like, I don't know what to do. I know some great professionals that I recommend. Not all credit companies are created equal. There's some really bad ones out there.
Sure.
But one thing I always like to tell people is, hey, if you've got bad credit, guess what? It costs a lot of money to have good credit, right?
Sure. Sure.
Paying interest in credit cards, personal loans, mortgage, cars, all that stuff costs money, which creates good credit, right?
Sure.
So pay the professional again,
Okay.
CPA, credit
And
professional.
if you, what we might do is if you do have like a credit professional you
Yeah,
recommend, I can drop those in the notes
sure.
to this video so that somebody might can at least reach out and find out what it's going to take to get started. I know I've talked about it some, and some of you guys know my story, but when I started bex+Co, you know, as a commission stylist, I was struggling. I was, you know, making month to month, like some months like late on my rent. I think my credit score I think honestly, when they would pull my credit score, I don't even know if it would give a number. I think it would say something like below 500
Yeah.
whenever they would pull it. Like it was so low that they didn't even want to put an actual number on it. And that might have just been like, I couldn't even apply for an apartment on my own. I had about 800 bucks in the bank and I started working with credit professionals. And, you know, of course, it's been a long time since then. It's been probably 9, 10 years, but my credit score now I think is like 780, and I had it at like 650 probably within a year and a half of
Yeah.
having below 500 just by doing the most basic things like getting things taken off my credit, paying a $30 text tag bill or things that are so tiny, and some of them would raise my credit score by 50 points all at one time. So,
People don't realize how quick this
not
stuff
that
can be turned
hard.
around. I
Yeah,
mean,
and
I've
it's
seen
really
I've seen
scary, but it's
I've seen
easy.
credit scores jump 80 points
Yeah.
within 30 days
Okay, okay.
just by doing small things.
I love that.
Yeah.
So we can kind of drop those resources so somebody can
Yeah.
maybe work towards it.
Also, save, save, save,
Yeah,
right? I know when you're making money, we gotta enjoy our lives. We gotta have a good time. We like nice things. I get it. I do too. But the sacrifices you make today will be worth it. I do a little visualization experiment or not experiment, just kind of a little thing I do with my clients. I get them, hey, close your eyes. What does your ideal life look like in 5
yeah,
years, 10 years? Right? Okay, let's create a plan to get you there. But the
yeah,
sacrifices you make today are going to be worth it. When you're sitting on your patio, your porch, your deck, you're enjoying that warm coffee, tea, cocktail, glass of wine, whatever, you're going to have that aha moment. Like all this work, all the sacrifices I made to get here, I'm here, you
yeah.
know? And that's, I always tell people, remember, because that moment will happen.
Sure, sure. It absolutely will. I love that. All right. Um, are there any challenges or obstacles self-employed people generally face when trying to get a mortgage? And I know that there
I was
are.
going to say, you know, there are.
And
So
how
let's
do
talk
you
about that
overcome those?
because this is really, really important, right? There's all kinds of information out there. Most of it's bad information.
Right.
I get phone calls from people, "Hey, my uncle told me this and that." I'm like, "Well, what
Right.
does your uncle do?" "Oh, he's a landscaper." Okay,
Right.
well, take his advice on landscaping, but that's about it, right? So, when it comes to self-employed, for traditional mortgages, meaning government-backed mortgages,
Mhm.
FHA, conventional, USDA, VA, Typically, they're gonna look at your tax returns, and they're gonna use your income after deductions, your adjusted
Okay.
gross income, right? So you may make $200,000 a year, but your taxes only show about 65,000 a year, right?
Mm.
The government's only gonna go off of that $65,000 number, and they average out the past 2 years, and they come up with a median monthly income, right? So, that shuts a lot of self-employed people out. So, we have solutions there. I call them traditional mortgages. They're actually the technical term is qualified mortgages, meaning government backed. And then
Okay.
there's non-traditional, non-qualified mortgages. This opens up a lot of doors for self-employed borrowers.
Okay.
So the most common challenge I run into for self-employed is overcoming traditional mortgage income. So we have programs specifically designed for self-employed individuals. We can use bank statement income, which is
Oh,
fantastic. We look
okay.
at the past 12 months of your business bank statements or 24 months.
Okay.
Um, they take all your qualified deposits.
Okay.
Don't get paid through Venmo if you can avoid it. Make sure the money's traceable so that we can
Yeah,
calculate.
I usually say Square. I mean,
Yeah,
we really
Square's
good
great.
Square because
The,
it tracks so well and the fees are
so
low.
easy
There's
to
no
use.
hidden charges. Okay, cool.
Yeah. And then what they do is they take all your qualified deposits for the year, they divide it by 12 to get a monthly, right? And generally what they'll do is they'll use 50% of that amount because they're going to assume that the other 50% is for expenses.
Got it.
Now, if you have a CPA, like we talked about,
Right.
we can take a third party CPA letter that says, "Hey, I went through their expenses. Only 15%
I
of
love
their
that.
income is expenses." So we can use that and leverage so that 10,000 a month all of a sudden becomes 15,000 a month,
Okay. And
right?
for self-employed hairstylists, generally, our overhead is fairly low. So it
Exactly.
really is closer to like 20%
Yeah.
expenses. So, okay, that's
So that's
great.
great. So that's bank statement loans. Those are huge. They're
Okay.
not that challenging to do. The rates are slightly higher because it is a higher risk to the bank. But the goal is to get you in the game of homeownership.
Okay.
And then we can work towards a more traditional mortgage within a short period of
Okay.
time. There's also 1099 loans,
Okay.
right? Similar to the bank statement loans, but 1099s are actually easier because we don't have to review all these bank statements
Okay.
and they're quicker. We have profit and loss loans. I mean, these are great, great
Like that's where you
solutions.
show all your profit
Yeah.
and loss. And
Mhm.
that's nice.
These really open up so many opportunities for self-employed individuals to become homeowners, and a lot of people don't even know they exist. And I'm glad we're talking about it because I'm a big champion for these loans because I find that a lot of self-employed people, specifically people in the beauty industry,
Yeah.
they don't really even dream about homeownership because they don't feel like they're going to get there.
You don't even wanna try for the loan because you're like the first thing when you go into, like, Chase Bank and you're like, "I want a home loan." They're like, "Okay, give us your W-2s." And you're like,
Right.
"I don't have a W-2." And they're like, "Ooh." I mean, that's
Yeah.
literally what they do. They're like, "Well, there are ways, but it's pretty tricky, and
Yeah.
is there a way to get a W-2?" You're like, "No, that's not that's not the point." But
Bex, you
yeah.
wouldn't believe it. I mean, I have loan solutions for people with no credit score,
Mhm.
no job income. It's insane.
Nice.
And the fees aren't that much higher. The rates aren't that much higher, but 100% of rent is interest if
Sure.
you think about it, right?
Oh, yeah,
And
absolutely. And I mean, once you get your books, if you're going into it a little quicker and you're getting a little bit higher interest rate, there's always refinance options when
totally.
interest rates drop. And whenever you're a little like maybe you get your credit score up a little bit, your income's up a little bit, and your business has been open a little bit
Yep.
longer, and then you refinance and you get that rate down. I mean,
Totally.
that's what we're doing now anyway, because rates are just a little bit higher than what we're used to. So, you just refinance when they go down.
Oh, guess what? I offer a refinance program, right?
Oh,
If we secure a
okay.
home loan with for you and we don't have to discount commission significantly to make it work, I'll contribute up to $3,000 towards your closing costs on the refinance.
That's huge. Okay, there you
Yeah.
go. So also, if anybody's watching and they're like, I have a really ridiculous mortgage rate and you want it to come down, especially when mortgage rates drop, if they drop, when they
They
drop,
will. They
if
will.
when they drop, that's amazing. Okay,
Yeah.
very cool.
And
I love
and what I wanna do with these programs is get people dreaming about homeownership,
yeah,
right? And then we take a dream, because dream bounces around in that cartoon bubble up there. We
yeah.
turn that into a goal. And then
Love that.
we have, 3 parts to every goal. Where are we at today? Where do we wanna be? And then I help develop the path to get you there.
I love that. And it feels very actionable and when you have a clear picture of what you're working on and just some steps you can take, it makes it seem so much more obtainable. So I love that. There is one thing I want to ask just to
Sure.
simplify a little bit, just because sometimes these we don't deal with these terms as much as here. So it's a business learning.
Yeah.
Uh, so whenever we're talking about our income and we say our gross income, that's basically all the money that comes into our bank. That's like everything that comes from Square before you subtract
Yeah.
any taxes, any expenses. That's our gross. And then our net income or our adjusted gross income, right? Are those terms kind of the same?
Yeah. So yeah, your net income is after all your deductions.
Okay, so
And
that's after you've taken out all of your deductions, um, for your expenses, but is that before or after taxes come out?
that is what's taxed.
Okay, so it's what is taxed, so it doesn't so you don't have to subtract how much you pay in taxes from
Yeah.
that amount. Okay,
Correct.
cool. I just wanted to clarify that
No,
just
that's good. I can get I'm super
establish
nerdy about this stuff, which
Yeah,
is really what you want in a professional. But,
right,
yeah,
absolutely.
sometimes I can throw out some terminology, so I'm glad we
No,
touched on.
no, that's great, though I just know I've been on calls before, and I know these things, but somebody will say, "What is your adjusted gross income?" And I have to be like, "Wait, is that
That's
before
when you're
after
just
taxes?"
texting your
What am
CPA.
I Yeah, I'm like, "I don't let me think for a second, like, I know what this term means, but I get a little wrapped up in, like, "Wait, am I gonna say it wrong?" So, that's why
Yeah,
I wanted to clarify. Um, okay. So, I think we've kind of talked about this already, but, how are lenders assessing self-employed? Like,
yeah,
what are they using to assess? And I think that goes back to question 1, but I think it's
yeah.
good to reiterate.
So we'll kinda go back to those 3 pillars, credit, assets, income, right? So we always start, like I said, the traditional route. Let's start with credit, right? What does our credit look like? Most people think, "I have terrible credit." I'm telling you, I look at it all the time. My credit's not
Oh,
good, and
can
then I
you
see
tell
their
us,
credit.
like, numbers? Like, can you just give us an
Yeah,
idea of, like, what number like, if I have a credit score of 500 and I wanna get a home loan, and I know that I'm not gonna be able to get it to 750 by the
sure.
time I get it, what is, like, a number, like, a reasonable number that I could still get a
Yeah.
home loan if my income is good and I've got some money in the bank?
So I'd say a number to shoot for is 620 or higher, right? We can do loans down in the 500s,
Okay.
uh, credit
Or
score,
a
but
higher interest.
620 is almost
Great.
credit-wise what's gonna guarantee you getting approved for a traditional government loan, and
Nice.
most of those non-traditional loans kind of follow that suit as well. So 620 is a good number to shoot for. Um, Anything over 700 is really good. We
Okay.
should be able to get you approved on the credit side, no problem. So,
Great.
I think that kinda gives you a good baseline
So
there.
kind of 2 tiers, 620 if you're, like, low and you're really trying to at least be looked at.
Yeah.
700 if maybe your income isn't quite where you'd like for it to be, but you got it. Okay, great. So those are 2 good options.
Like, everything's based on risk,
Okay, I love that.
right?
I love that.
So
Okay,
if you've got more money in the bank, they may allow your credit score to be a little bit lower, right?
okay. And
Um,
that's where, assets come in. And
yeah.
what else are assets? Like,
Well,
what
let's
other
talk about
than
that.
money in the bank, what is an asset?
Asset sounds cool. It really just means cash in the bank,
Okay,
right? Not just cash in the bank, but let's say you have a retirement account. That
okay,
could be an asset.
okay,
Let's say you have a life insurance policy with a cash value. That
okay,
can be an asset.
okay. I didn't think about that.
Um, Basically, assets that can be liquid or you can access, right?
Okay.
Savings, checking, retirement accounts, stock accounts, life insurance policies, even crypto.
Oh, wow.
You
Okay.
can actually pay your down payment using uh,
Nice.
cryptocurrency. It's kind of crazy. Probably
Okay.
not saying that properly. There's some crypto nerd that's gonna yell at me for that,
Oh,
but
well, not on this not on this course.
yeah,
You're
assets,
not that's not the audience
yeah,
that we're talking to.
assets. I always say cash is still king. On the non-traditional bank statement loans, they like to see 6 months of reserves to 12 months reserves in the bank, in case you get hurt and you can't work for 3 months. You can still make the payment,
Okay.
right?
Yeah, they're just making sure that you're not, like, $0 in the bank going into it, and I know they wanna see a down payment usually,
Yeah,
right?
yeah.
Like, you have enough cash to pay whatever down payment you have to pay.
Exactly. And then income, we already kind of touched on that, but that's the big scary one for people. I'm here to tell you, don't be scared. Just call me.
Okay, cool. Because you can figure that number out. Mm,
Exactly.
nice. Let's see. We kind of touched on this, but I just wanna go back to it one more time and ask, like, with the credit score one more time.
Sure.
Like, if you're looking at those 3 pillars, the credit score in particular, how important is that? Like, if you were ranking them, most important, second most important, and third most important with those 3, can you do that, or is it just they're interchangeable?
Yeah, I'd say for the audience that we're reaching and
Mhm.
we're talking to, here, I'd say credit is fairly important,
Okay,
right? Um, but credit is also worth your investment,
okay.
right? Um, it kinda depends on the other 2 pillars, but I'd say credit is pretty important,
So if you're
right?
gonna like, if you wanna do this, it is time to go ahead. If you're 2 years out and you're thinking about getting a house, it is time to start working on your
Oh, yeah.
credit right now. I mean, I guess that goes for anything though, like, if you want a car, if you want a
Yeah.
loan, if you need a business loan, like, you want to work on your credit regardless.
You know, one of the things I find is people say, "I'm 2 years out." Then they start working on this stuff, and then in 6 months, they're like, "Wait a minute, I'm
I'm
actually ready."
Oh, I love that. Okay.
And a lot of the things I hear a lot of time, "Well, I'm in a lease for another year."
Sure.
Well, let me just give you some insight there.
Yeah.
Real estate appreciates on average about 5% a
Sure.
year, right? So if we're just gonna use a round number, $100,000 house, which those don't exist, but we'll just use it.
It'd be nice.
Well, in a year's time, that house should be worth at least $105,000, right?
Okay.
If you're paying $1,000 a month in rent after a year, that's
Yeah.
$12,000 down the drain,
Sure.
right? So I'm not a big sports nerd, but I do like to use this metaphor and analogy. You know, when you're paying rent on a home or apartment or something like that, think of it like a professional sports game. You bought a ticket, you're gonna go sit in the stands, and you're gonna watch other people play this game, right? My goal is to work with you and develop you so that you're not paying a ticket. You're at least on the sidelines. We're getting you
Right.
ready,
Okay.
right?
I hear you.
And then once you're ready, you're on the sidelines. And then before you know it, you're in the game.
Okay.
And in the game, you might get tackled. But if you work with a professional like myself and you have other professionals around you, you're going to score some touchdowns.
Sure. I love that. And you don't mind, I mean, so if somebody's like, "Man, I'm not ready," but you don't care if they reach out to you a year before
No,
you're ready
no,
and just
no.
ask some questions, and you'll give them a plan. I mean,
Oh, yeah.
like, you're really open to sitting down and chatting and giving somebody a plan for and working with them and communicating
Oh,
until
yeah.
they're ready.
I'll work with clients for 2, 3 long however long it takes, and I'll tell you right now, I'll help the wealthy person add a 10th property to their real estate portfolio, but if I see somebody out there that's working hard, doing the right things, I'll do backflips for them.
Okay.
And at the end of the day, when we achieve their goal, they did the work. I can't
Right.
put money in people's account. I can't make them fix their credit. So I don't pat myself on the back. We celebrate you when we achieve your goal because you're the one that did the work.
Yeah, I love that. Okay, so with that being said, tell us how to reach you. Like somebody watching this right now is like, "Okay, I wanna buy a house. I have no idea where I stand."
Sure.
How can they get a hold of you to start working on that process?
Well, first, don't wait till you think you're ready,
Okay,
right? Call me so we can figure out where are we at today,
right.
right? I'm out there. I'm on the social media. I speak at events. I
Nice.
write.
Gene's everywhere, and he does I mean, he's a DJ too,
I am a DJ.
but he's a
But
fun guy. He's a fun guy, so
one
definitely
thing I'm very careful of is to not put myself on a pedestal. I see that happen where people's egos take over and then people are intimidated to reach out to that person. Not me. My phone, my email is always open. So you can text, call, email me. I don't care if you think it's a silly question. I love talking about this stuff. So you can reach me. My website's summitmortgagesolutions.com. My email is genegriffin@barrettfinancial.com. My cell phone number is 512-517-9822, and I'm very responsive, and, unless I'm doing something at the moment, I'm pretty obsessive about getting right back to people and letting them know, "Hey, give me a few minutes, I'll call you," or whatever.
oh,
You could text.
he means that.
Yeah.
He's always so responsive.
You can text, call, email. Pretty active. I give a lot of tips on my Instagram
Mhm.
platform and TikTok, which is at Gene Griffin Mortgage on both platforms. But yeah, I do events all around town. Um, my team is expanding to other states. We're in Missouri, we're in Colorado, we're in Utah, Arizona, and yeah, we just want to we feel that with the licenses and the position that we have, my team, this is our mentality. is we have a responsibility to society to help people become homeowners.
Yeah.
Everything we do is centered around value, providing value to our clients, our partners, the team members on my team,
Mm.
and the communities that we serve.
I love that. I love that. That's awesome. We're gonna drop all of that your info into the resources so you can find everywhere he's listed. On our resources, you can reach out to him. I would absolutely follow TikTok and Instagram. I do, and see all the things he's up to, all the events he does. I always watch whenever you're doing Emma. He has a daughter, Emma, who's
Yeah,
so sweet.
she's
And the
the
entrepreneur, like the young entrepreneur
mhm.
group that you
Oh, it's so
guys
much fun.
do, which is so cool. I love watching that.
Yeah.
Kind of I think it's so neat that we've got kids as young as like I mean, there's some really young ones in that group, right? Is it an
Little
age?
kids.
Yeah, like learning about how to run a business at that age. Like if I would have had those resources, it wouldn't have taken me so long to take the leap, you know?
Yeah.
So I really, really love everything you're
You
doing.
know, and one other thing I wanna touch on just because I think it's important, look, my parents were great people growing up. We had food, we had clothes, we had a roof, we had all the love. That's about all we had, right? So I grew up in, now they call them manufactured homes, but this thing was a trailer house.
Yeah,
I grew up in a trailer house in the middle of the woods,
yeah.
and it ended up arsonists burnt it down when I was 8 years
Oh
old.
my
My
gosh.
parents didn't buy another home till they were in their late 50s.
Mm.
Um, so as I grew up, I vowed to be better with my money, make better decisions. And then once I kind of learned, through my career, I was like, man, I could really make a positive impact on people's
Yeah.
lives. So this is my purpose,
Oh, yeah.
um, and I take it very seriously, and I love it. And if the more challenging something is that comes across my desk, the more I obsess over it.
Okay.
I mean,
I
it's
love that.
not
I love
helping
to hear that
sometimes.
part of your story. I mean, we all wanna hear that part though, because one of the things this course is doing too is like we've all got these limiting beliefs and mindsets about what's for us and what's not for
Totally.
us. And these stories we play out in our head and hearing, I mean, my story is similar in that we had no money growing up. I was fed, I was happy, I was very loved. I didn't know we didn't have any money, but you know, we went without water or electricity
Sure.
sometimes.
Oh,
Like
yeah.
that was kind of a normal thing. My parents were doing the best they could, and now they're very financially independent. It
Yeah.
took a lot of years to learn that, but same thing that where you tell yourself this story that things aren't for you. That's not how you grew up, and it's just not the truth. It's not
No,
the
it's not. And, I've done a lot of reading and studying on that, and
truth.
we're not gonna dive into that
Mhm.
too much,
Right,
but
it's a whole nother story, but it's a fun one.
yeah, but, your past can define you however you choose, right? If you want your past to give you a negative mindset and you allow that, you can do that.
Yep.
But you can take your past, positive or negative, and allow it to drive you
Right.
and have it be your ambitious driving force, and that's what I chose to do. And I've
Mhm.
built a great life for myself, and I'm gonna
Absolutely.
continue to do that.
Yeah. Yeah. I love that. Well, we'll end
And
on
you
that.
can too.
I know. That was good. It's a great place to end. I love it. Well, thank you so much, Gene. I do encourage everybody to please reach out to Gene with your questions. This is why we have experts on. It's to truly not just tell you how to do things, but also give you the resources and the people who
Yeah.
can get you there. So do reach out. He's easy to talk to. We go to dinner all the time with Mark and I and him and Adrian. So definitely reach out. Resources are down there. Thanks, Jean, and,
Thanks.
we will talk to you soon.
Awesome. Thanks for having me.
Of course. Bye-bye.